Hi, I'm Parag Sanghani with the Westwood Salient Energy Infrastructure Team. For today's video, I will recap energy industry performance and provide a short update on company earnings so far this year. For the month, midstream indices were generally higher, with the Alerian Midstream Energy Index, or the AMNAX, delivering 2.5% total return, while the AMEIX generated 3.1%, as shown in the top table. The MLP-only index, the AMZX, was down 1.1% for the month. Year-to-date, midstream performance continues to impress, with indices up about 13 to 15%, depending on index composition. We did see weakness in broader energy indices during the month, such as the large cap XLE, which was down 1.3%, and the OIH Oil Services ETF, which was down 4.4% for the month. We believe a correction in oil prices was a primary driver of the monthly performance for those sectors. Oil prices were down about 6% in May. Renewables were a bright spot for the month, with the solar ETF TAN up 6.4% and the iClean ETF up 7.1%. Strength in renewables was driven by news that the U.S. will impose additional tariffs on Chinese solar panels and other related equipment, which is helpful to U.S. renewable manufacturers. Looking at year-to-date performance, traditional energy continues to do well, while renewables remain challenged. The large cap XLE is now up 12% for the year, but TAN is down 9.5% and iClean is down about 4%. Commodities had an interesting month of May, with natural gas prices up 30% and global LNG prices for both Asia and Europe trading meaningfully higher. Natural gas and LNG are now actually trading higher than they were at the start of the year. Moving on to midstream specifically, U.S. C Corps on a simple average were the best performers for the month, up about 6%, while Canada was up 3.6% and MLPs were up 1.7%. Strength in the month was driven by better than expected earnings. Year-to-date, U.S. C Corps continue to dominate performance, with the simple average up over 23%, followed by MLPs, which are up 12%, and finally Canadian Midstream, which is up about 11%. Strong first quarter earnings and improved guidance across the industry have been well received by investors. Themes emerging from quarterly calls showcased an improving backdrop for midstream in 2024. A few takeaways from the quarter are shown on page 5. First, winter storm-related shut-ins of production were less than anticipated and could potentially result in better overall volumes for the second half of the year. It appears that oil production was more impacted than natural gas during the quarter. Second, companies remain capital disciplined and focused on dividend growth as well as buybacks. Third, companies reiterated positive 2024 outlooks and several raised full-year cash flow guidance. And finally, low natural gas prices led to wells being shut in during the first quarter, and we now are seeing those volumes return to the market at improved prices. We should see growing natural gas transportation volumes in the second half of this year as additional wells are returned to service. Thank you for your time, and if you have any questions, please reach out to your Westwood representative.